What you've been told about passive income is a lie. This is not going to be your average X number of ways to make passive income kind of video. If you look up passive income on YouTube, you'll be met with videos from the usual suspects. Ali Abdaal, Graham Stephan, Andre Geek, Nate O'Brien. Go check out those videos if you want to hear what those guys are doing to generate income. What I want to talk about is the reality of passive income and how you're likely being misled. Is it reasonably possible for the average Joe to build meaningful passive income? And if so, what does that look like and how do we get there? The Corporate Finance Institute defines passive income as any money earned in a manner that does not require too much effort. Forbes defines passive income as money which flows in regular intervals without the need for putting in a considerable amount of effort to make it. The commonality between these two definitions is the word effort. Passive income is being defined as money you receive for doing little or no work. With that in mind, let's dig a little deeper. But before we do, can I ask that you take just 2 seconds out of your day to leave a like on the video, and if you are new around here, don't forget to subscribe. The first point I want to touch on is how the only true form of passive income is investment income, and how passive income takes a long time to build. Look at any graph which shows the power of compound interest. In fact, let's do an example right now. Say we invest $10,000 in dividend paying stocks and $500 each and every month thereafter for 40 years. And we'll assume we're earning 4% each year in dividends. Look what's happening in the first decade. Virtually nothing. But as time moves on and we get closer and closer to year 40, then the growth starts to become exponential. So why is this significant? It's significant because people aren't appropriately managing their expectations for passive income. When people think about passive income and its purpose, they're thinking about escaping their 9-to-5 job and sitting on a beach in the south of France while they continue to earn money. But the reality of actually doing that with passive income alone isn't as optimistic, especially if you're expecting to do it in your 30s or 40s. Depending on the dividend yield of your dividend paying stocks, it can take hundreds of thousands, if not millions of dollars and euros to replace your salary with passive income. Your job pays you a salary of 40,000 euro. We'll say that each year you get a raise of 2.5% to account for inflation, and we won't account for any bonuses or raises associated with performance. If you work this job for 35 years, you'll earn over 2.2 million euro in base salary before tax. That's a pretty sizable amount of money, which is why we oftentimes say that your greatest asset is your earnings potential. But if we're to live solely off of passive income, we'll need to replace that 40,000 euro at a minimum. Let's take a look at what kind of investment is required to earn 40,000 euro each year in passive income. Johnson & Johnson currently pays a quarterly dividend of $1.06 per share, which is $4.24 per year. To earn $40,000 a year in dividends from Johnson & Johnson, you'd need to own 9,433 shares. 9,433 shares in Johnson & Johnson would cost you over $1.5 million based on current market prices. Let's take another example. Realty Income currently pays a monthly dividend of 24 cents, which is $2.88 per year. To earn $40,000 a year in dividends from Realty Income, you'd need to own 13,888 shares. 13,888 shares in Realty Income will cost you just over $940,000 based on current market prices. Clearly, the size of the investment required to generate the same amount of passive income depends on the dividend yield of the stock. But in both cases, the size of the investment required to generate $40,000 in dividends was quite large. The reason why I chose a salary of 40,000 euro for our example is because that's the average salary for workers here in Ireland. So for the average worker, investing enough capital to replace their salary with passive income is going to be very difficult, especially when you consider mortgage payments, family payments, cost of living, etc., etc. Now you might say to me, but what about real estate? Real estate investing has the potential to generate rental income that is passive in nature. Remember our definition from earlier. It's money earned without a considerable amount of effort. If you ask me, the best way to do this is to buy a residential property, live in that property and rent out the additional rooms to your friends. Not only are there tax incentives for doing so, but you also get to live with your friends, which is pretty cool. But there are two critical considerations that you need to take on board before going down this road. The first is leverage. Real estate investing involves leverage, which just means that the investment is being made using debt, either in full or in part. What you need to know about leverage is that it's a very powerful tool, and it has the ability to amplify both gains and losses on investment. The reason why this is significant is because you have a much greater chance of being wiped out with real estate investing than you do with stock investing, depending on how much you borrow to buy the property. So in your pursuit of passive income, you're putting your initial investment at much greater risk. That then leads on to the second consideration, which is the learning curve. Physical real estate investing involves property taxes, solicitors, real estate agents, banks, insurance. So when you consider all of that and the cost, as well as the absolute necessity of choosing the right tenant and the risk of investing with leverage, the passive income isn't as passive as it might seem, at least at the beginning. So just know that true passive income takes a long time to build. Whether it's making consistent investments in dividend-paying stocks over many years or becoming accustomed with the learning curve associated with real estate investing, the key message is appropriately managing your expectations for what passive income will do for you and at what stage in your life it will do it. Passive income isn't income we spend in the early days of our investments. When we receive dividends from stocks or rental income from properties, we're not going out and spending that money. First of all, we need to pay taxes, and in the case of real estate, we need to pay for the mortgage, the insurance, and whatever else. And after that has all been paid for, what we should be doing is reinvesting that money to earn even more passive income in the future, because that's what unlocks the power of compound interest. The next point I want to touch on is that what you think is passive income isn't passive income. Let's revisit our definition. Money which flows in regular intervals without the need for putting in a considerable amount of effort to make it. I'm not trying to get hung up on definitions here. The sole purpose of this video is for you to appropriately manage expectations and understand the reality of building income streams. Most videos on passive income talk about side hustles, a means of making money alongside your salary, starting a YouTube channel, a podcast, selling a course. I absolutely agree that you should be doing those things, but they don't represent passive income. They represent scalable income. In order to be monetized on YouTube, you need 1,000 subscribers and you need 4,000 public watch hours on your videos. From experience, I can tell you that it definitely requires some degree of effort. Nobody is going to listen to your podcast or buy your course without knowing who you are. So you need to spend time building your brand and making high quality, value adding content, and do so at scale. This is why managing expectations is so important. You've got guys and girls coming along and starting these so-called passive income streams, and they're expecting the world overnight. But ultimately, they're going about it the wrong way. They're pursuing these projects with the view of profit in the short term. So here comes the aha moment of this video. Passive income alone will not free you from needing to work. Most people are pursuing passive income streams because they want freedom. Freedom to do whatever they want, whenever they want. But in reality, that freedom doesn't come from passive income, or at least passive income alone. It comes from starting, building, and scaling value-adding businesses. Now, if you don't follow Vizzy Andre on Instagram, I highly recommend that you do so. But he put up a post which said, everyone needs a skill that raises their value or a project that improves the world. When you start building something that can stand on its own, you start to see your capacity for being functional. And this has been my experience making YouTube videos. You start off not knowing what way it's going to go, and most importantly, you start off with managed expectations. Then as you experience growth and new opportunities, you start to see how it can form part of your infrastructure, and this is how you should view income streams. What you're really doing by starting that YouTube channel or making that course is building an infrastructure of scalable income streams around yourself. Those income streams are very powerful, but they require significant time investment. Therefore, by definition, they are not passive. And you're only ever going to stick with the projects that you have passion for. Meaning that if you don't have passion for what you're building, you're not going to consistently invest the time and you're not going to be able to scale into a sustainable income stream. So if you're starting these projects thinking that they'll generate easy money, I can guarantee you that you'll be sorely disappointed. That begs the question of how you should go about starting scalable income streams and building this infrastructure around yourself. There was an article written in the Harvard Business Review back in the 90s called How to Kill Creativity by Teresa M. Amabile. In that article, Teresa explains how the concept of creativity is made up of three components: expertise, creative thinking, and motivation. By using this framework for creativity, you'll be able to identify the projects that you personally can scale into sustainable income streams. Your expertise represents your raw materials. What is it that you're good at? Is it cooking? Is it dancing? Is it sports? Is it finance? Whatever it may be, your expertise represents your talent in its raw form. Creative thinking, on the other hand, is all about how you take that expertise and package and produce it at scale. How can you deliver your expertise in a unique way that hasn't been done before to as many people as possible? And finally, your motivation is the driving force behind both your expertise and your creative thinking. Without motivation, both expertise and creative thinking are worthless. What's really interesting is how she explains motivation being made up of both extrinsic and intrinsic motivation. The extrinsic motivation is the classic carrot on a stick incentive, and it's the basis on which many people are pursuing these various projects. People have an unrealistic expectation for monetary gain when they start that YouTube channel or make that course. And while they might be very motivated at the start of the project, when they realize the money isn't coming, they quickly lose that extrinsic motivation. Intrinsic motivation is all about passion, that ultimate belief in what you're doing. And it's the primary and sustainable driving factor behind both expertise and creative thinking. Even in the 90s, it was widely believed that pursuing projects for monetary gain alone isn't sustainable. You need to truly believe in what you're doing. In conclusion, the truest form of passive income is investment income. Any income expectations from side projects represents scalable income, not passive income. Scalable income is powerful and has the potential to grant the freedom which most people are incorrectly looking for in passive income. I'm not saying that passive income is a waste of time. Far from it. I'm saying that you need to have reasonable expectations for what passive income will do for you. Passive income represents just one income stream in your infrastructure. By starting, building, and scaling value-adding projects, you can start to add scalable income streams to that infrastructure. So I really do hope you enjoyed the video here today. As always, if you did enjoy the video, please do let me know in the comment section below. Leave a like on the video, subscribe to the channel, and I'll see you in the next one. Cheers.